Tracy Mortgage Lady here. Today I'm going to talk to you about asset-based DSCR loans. Many investors don't know about these types of loans, and they are available as long as the DSCR ratio equals 1 or higher, and we're going to get to that in just a second. So DSCR stands for Debt Service Coverage Ratio, which means as long as the rental income coming in covers the debt service of the PITI payment, principal, interest, taxes, and insurance, and HOA in case the property has an HOA, then the property will qualify. Lenders like to see a DSCR ratio of at least 1 or higher, and they will lend 75% of the purchase price. So you as an investor will have to come down with 25% down payment plus closing costs, and underwriters will want to see where that came from, whether it's from the bank or from a 401k or a self-directed IRA or wherever the money is coming from. We need to see where that is sourced. Some lenders will go down to 0.75, which means you're really not going to make any money, but there are so many reasons why you would buy real estate. Sometimes it's not for cash flow, sometimes it's for other reasons. But if you want to get cash flow, you want at least a ratio of 1.0. How do we get that 1.0? Well, you're going to divide the amount that you're receiving from rent into your mortgage payment. So let's do an example. Say you buy a property for $150,000 and 8.5% interest. So your mortgage payment with principal, interest, tax, and insurance will be about $1,400 a month. Say you're getting $1,500 a month rent. So you're going to divide the $1,400 into $1,500, and you're going to get 1.02. So you're gonna have a qualified property for a DSCR loan. However, we're gonna look at your personal FICO score as well. Why are we looking at your personal FICO score when this is an asset-based property? Well, you ultimately are gonna be making the mortgage payment. We wanna make sure that you're responsible enough to be able to make sure your mortgage payment is paid, so we are gonna look at your credit report and your personal FICO score. What else can we do with DSCR loans? Well, there's a prepayment penalty. So when applying for a DSCR loan, we're going to look at typically prepayment penalties are 3 or 5 years. 3 years, if you're not going to keep the property for very long, is the better way to go. However, if you're going to keep a property for a long time, more than 5 years, then a 5-year prepayment penalty is the way to go because you're going to get just a bit of a lower interest rate. What are the interest rates? Well, for a DSCR loan, the risk is a little more than a conventional loan with lenders, so the interest rate is just a little bit higher, usually about a point higher or less, depending on your credit score. Again, the better your credit score, the better interest rates you're going to get, just with any loan. Also, it could be a interest only. So you're going to cash flow a little bit better if you only pay the interest. However, you're not going to be paying the principal down. It will always be the amount that you borrowed as an interest only loan. Or we could do a 30-year amortized loan, just like any other loan. You are buying down the mortgage every month when you make your payment. There are no limit to how many of these loans you can have. This is huge. With conventional loans, you can only have 10 loans. With DSCR, you can have as many loans as you need. So you're leveraging your money to be able to buy more properties. And you can have as many loans as you want. Your tenants are paying the mortgage with their rent payment. So you're winning. And what else are we going to talk about? It is best to own your own home, but it's not 100% necessary. The lenders want to see that you do own your own home and you're making the mortgage payments on your own home on time and you have proper insurance. However, if you don't own your own home for whatever reason, the lender might want a letter of explanation on why you don't own your own home. But it's not a deal breaker. So renters, if you want to buy rental property, DSCR is the way to go. Let's see. As I said, this is an asset-based loan. For you investors that don't have that W-2, this is the perfect way to be able to buy as many rental properties as you can possibly buy. I think that's it for now. If you have any questions, please feel free to reach out to me. I work for Empire Financial, and my email is Tracy, Tracy, at mpirefi.com. Or feel free to call or text me anytime, 352-223-0712. I love talking real estate, and I love helping investors grow their portfolio. So let me know how I can help you, whether it's a DSCR loan or any other type of loan. I'm here to help.